Welcome, this guide will walk you through the LBO model with verified metrics. Before we proceed, please check both Enable Editing and Enable Content. This allows the model to refresh and pull in the most up-to-date financial data from your company. Please note, this process may take anywhere from 2 to 5 minutes, depending on the size of your company's data, so feel free to grab a coffee while the data loads. Scroll down to see the table of contents. This is the directory which include all the tabs for the LBO model. Most information and financial figures in the preceding tabs are derived from the operating model tab, which we'll cover later. Note that the model uses USD by default. This will change based on the currency of the underlying data. Now, let's go through the model tab by tab. The glossary tab provides explanations for all the abbreviations used throughout the model. Next is the AI Account Group tab. This tab shows how the AI organizes account names from Xero or QuickBooks into broader categories. Account grouping helps simplify data interpretation and analysis. You'll also see these groupings reflected in the operating model tabs. If you have feedback or disagree with the AI's grouping, please use the survey link provided to share your thoughts. The Assumption Summary tab provides a summary of key assumptions, automatically referenced from Transaction and Operational Inputs tabs. The Annual Summary tab shows key metrics in an annual view, from actual to forecasted financial figures. The Next 12 Months tab, by contrast, focuses on a forecast of the first 12 months following the latest actual data. The Transaction Assumptions tab is where you'll input key assumptions for the deal. Before diving into key inputs, note the model's color coding under the Formatting section. Black for formulas. Light blue for post-LBO accounts. Dark blue for deal and forecast inputs. Green for pass, model checks, and red for fail. Let's start with the key inputs, which include enterprise value or purchase price, the latest reporting month, and the closing date, all predetermined by the transaction parties. The Sources and Uses section outlines the financing structure and associated fees for the deal. The Pro Forma Equity section shows the company's ownership structure among different shareholders post-LBO. The Blended Cash Interest shows interest rates for each type of debt. By filling in these key areas, we can quickly assess the company's financial position post-deal, projected returns, and other critical insights. Moving on to key outputs, the Transaction Assumptions section shows important metrics calculated from the initial inputs, such as EBITDA multiples and equity value. The Total Sources and Uses, reflecting deal fees and adjustments, are also displayed. The Pro Forma Balance Sheet, referencing these inputs, gives a view of the company's financial position both before and after the deal closes. In the Operating Model tab, you'll find the exit multiple, initially set to the entry multiple. Adjusting this impacts the total enterprise value and, ultimately, returns post-LBO. With just our key inputs, we can view potential equity returns for different investors, including ROI and IRR over the forecast period. Let's explore other essential features of the LBO model. In the Operating Model tab, you'll see the income statement, balance sheet, and cash flow statement, displaying 2 years of historical data and a 5-year forecast by default. This forecast also extends to related components, such as the working capital schedule, Capex and D&A schedule, debt schedule and covenants, and the returns summary, which we'll review in upcoming slides. In this tab, you can input assumptions for forecasting across the projected period, with default settings for 5 years. Customizable drop-downs in column E allow for further fine-tuning of assumptions. As you scroll down, the working capital schedule shows changes over time in working capital, which directly impacts cash flow. Drop-down options allow for key adjustments, while manual input areas accommodate custom forecasting. Next, the Capex and D&A schedule reflects the company's investment in physical and intangible assets throughout the forecast period, along with associated costs over their useful lives. Moving to the next section below, post-deal projections, including the debt schedule, help track debt obligations, interest payments, and repayments, ensuring financial obligations are met. Input options like cash sweep, using excess cash flow to pay down debt, are also available. Debt covenants, which protect lenders' interests, include key metrics like FCCR, leverage ratios, and current ratios. These can be customized in the input rows or modeled as single values for the deal's duration. For reference, all relevant parameters are visible under Model Check in the Transaction Assumptions tab. Lastly, the returns distribution waterfall illustrates how proceeds are allocated among equity investors after satisfying debt obligations. That concludes our overview. In future videos, we'll walk through using the LBO model as a banker on a live deal. Thank you for watching, and we look forward to seeing you in the next session.